You guys obviously live, eat, sleep, and breathe short selling and how it affects markets. Sonali Basak, our Wall Street reporter, reminds me that underwriters have the option to allow for shorting. It's not clear, at least to me right now, whether or not they've done this. So thanks to Sonali for that slight correction there. But the interesting thing, I think, is that if they do, it really could allow some cushion. And if you have a big drop, for short sellers to go in there and cover, it could provide momentum for a comeback. You see it the same way?
Yeah, traditionally you can't cover a short off an IPO. So I think it's a smart move. Look, these markets are just so flooded with liquidity. You've had this boom in the marketplace, particularly around financial technology. And I think it's a smart move. The markets won't always be buoyant, even though they're down day one, everybody panics. But over the longer term, I think it's a smart move. It's a way to ensure you have liquidity, and it puts a bottom, a floor underneath your stock price.
We can see that currently they're really trading flat, 37.70, so they've come back. But it still is a bit of a bummer to trade below your issue price on the first day. What does it mean to you, Bob, when you look back over, we've had some pretty famous examples. Emily Chang was mentioning Uber. Katie Roof brought up Facebook, which also didn't have a very enthusiastic pop on the first day, and it was a really messy day at that. Does it portend doom for the future?
No, not at all. I think there's a lot to unpack here with Robinhood. There's so many trends that are encapsulated in this IPO. One, this company has changed the definition of what is a retail investor. 20, 30 million accounts, average age 31 years old, lifetime value, really strong. Two, it's changed the way people trade.
Yes.
Socially mobilized influencing into capital markets, that's a first. It's changed how institutional investors short stocks. No one short stocks the same way because of what's going on in the meme stocks. It's changed market data. Look at all the market data that's necessary because of this socially influenced app. And finally, it's changed market structure. Who buys, who sells, and where, it's had an impact on that too. So like Facebook, I think the long-term trends are in this stock. It's also a signpost to the future of financial technology. There's a lot here.
Well, and like Facebook, to me, it's not 100% clear what this business is. Maybe it's more of a social media company even than, a finance business, because people want to go on it and do this almost maybe like a gaming company. I think they probably would take some offense to that. But, you can spend all day on there trading options, just like the kids used to do on Snap or maybe do today on TikTok. It must make it hard to value this business.
Well, you're taking a bet that they're going to know how to monetize all these accounts. And the business model is clear today, and they have a lot of optionality to it. There's a lot of things they can do. And I think one of the earlier guests was talking about they wanted to challenge Coinbase. They want to do more media stuff. There's a lot of different directions they can go. So it's a long-term story, but I actually think buried in the crisis of Robinhood is really the future of fintech. So when they had a capital call, and basically because of settlement cycle, that's a really interesting piece that investors should watch, because I really believe that's a switch over from what has been now, the fintech darling, which has been payments. There really hasn't been that much activity in capital markets technology. And this is a signpost. Robinhood is the first step in this, and it's very, very, very influential for markets.
This is one of the things I think investors are weighing, Bob. When you disrupt an industry like this, do you have a regulatory overhang to watch out for?
There's no question. So what I was trying to get to is that just think about if peer-to-peer, if they go peer-to-peer or challenge Coinbase, they could free up probably $500 billion that dedicated in the financial system to make sure things settle. That's $5 trillion of balance sheet. 10x times 500 billion is 5 trillion. That is the equivalent of one Federal Reserve. That they could actually get into that business of peer-to-peer trading, peer-to-peer lending. There's a lot of things they could do to justify a higher valuation.